Right.
Like, I haven't unpacked my winter stuff.
Go ahead and pass this over to you.
Oh, sure.
Yeah,
Anybody-
Thank you.
Yeah.
I'll pass this over also.
Absolutely.
Does anybody else still have sundresses hanging in their closet?
Listen, we're still gonna have some warm days.
Yeah.
We are.
Good morning, everyone. Thank you all for joining us today. Yes, hey, I'm recording. We have Jay Tolisano and Jeff from Cross Country here today. Thank you both very much for joining us. We appreciate it. Jay put together a little presentation for us, so I'll pass it over to you.
Cool.
Thank you for coming in.
Yeah, so Mariano and I were just kind of talking about some things that are going on in the market and kind of maybe what are some beneficial and helpful things to kind of talk about that could help you guys out. So thank you for having us. Obviously, I've known Julie for a lot of years, and a lot of folks on the team, obviously, I've known for a lot of years. So happy to be here and support you guys. And Jeff and I basically partner on everything. Okay, just so you know. So we help each other out on basically everything. Hello.
Oh, fine.
So
Okay.
right now, what we're hearing from clients and what you kind of know from being in the market and being top producing team is that like there are really like three major things that are affecting folks in the marketplace right now, buyers and sellers, right? And I think it's rate, which is number one, right? Everyone wants rates to be lower. The reality is rates right now are in historical averages in the 6% range, right? So if you look back since they've been tracking, right, you're in the range that they've kind of been on an average, right? But people have that 2020, 2021 hangover still going on of 2.5% and 3% and 4% rates. So rate is number one, but and there's nothing we can do about rate. I mean, we can use buy downs, we can use temporary buy downs, permanent buy downs to help people out, right? But the rates are going to be dictated by what's going on in the market, and what's going on in the economy. So there's really nothing we can do about that other than implement some buy downs. The few things that we can help out though on are helping sellers get out of their home and buy something else. And that's like a big, huge hurdle. And if you follow certain real estate influencers online and you read about it, a lot of people are in a house and they don't know how to buy the next house. And I know you guys have heard of definitely different options that exist out there, but I wanted to give you guys a consolidated look on how we can help people buy before sell, okay? So we have, everyone has bridge options. However, I feel like we definitely have the best in the business, and we have at least 5 options that are super helpful to buyers that Jeff and I use literally all the time.
You know, you could put your chair up if you want, right?
You mean like raise it?
Yeah.
Do I look short?
Yeah. There you go.
All right. So number one, this is actually a very simple one that every single lender has at their fingertips. However, not many lenders realize they have this as an option. Okay. So if your seller, Krista, we'll use you and pretend you have a seller. Your seller is selling a house and they have an accepted offer on their house, and there's either no financing contingency, or it's a cash offer, or the contingency has been released. We can help them buy the next house without qualifying them with the existing home loan payment. Wow, that's a challenge for people, right? Buying a new house, how do they qualify carrying the existing house? That's a very simple guideline that a lot of people forget. That works for conforming or jumbo loans.
Can it state, so it can state right on the thing that it's not contingent on selling that house?
Yeah, so if the sale has a cash offer,
Mm-hmm.
or if the sale has a contingency that is cleared, right? We get a letter from the attorney that says there's no mortgage contingency. The buyer can then, the seller, which is now a buyer, can go buy the next house without us qualifying them with that payment.
Perfect. And can you actually state, because if I'm working with a buyer,
In the pre-approval letter or in the communication on the pre-approval, yes, not subject to sale.
Yes.
Yes,
Yes.
yep,
Perfect.
we can do that.
So
Yep.
then are you
That is
qualifying them
amazing.
based on assets or
Nope.
based on the value of their current home?
No, because their home that they're selling has an accepted offer with zero contingency, like mortgage contingency,
Right?
we do not have to include that payment against them.
Do they have to close on one or the other?
They have to have the money, obviously, to buy the next house, right? They have to have the down payment for the next house.
Yeah.
But there are people out there that actually have the money to buy the next house.
Right.
But they're like, well, that's great, but I can't qualify with my existing house.
Mhm.
This will allow them to do it. And a lot of deals are cash offers or no contingency, or the contingency has passed at this point, right?
and just playing devil's advocate, just so I understand as I walk through the whole thing, knowing I can be on either side of it.
Mhm.
their house falls apart. They lose their buyer, like their buyer doesn't go through with it. Now they're buying this house. And this buyer maybe loses their 10%, which stays in escrow, which isn't released for a long time. Then these people,
We don't ask.
yeah,
So I think what you're saying is,
Well, is now the seller on the hook to buy
to
that
buy
house?
the other house, even if their other house hasn't sold, or they'll lose their 10%.
well, if they don't have a contingency in there to protect them, sure, like that's a whole different, like, when I say different
That's just a
animal, right?
part
That's
of
a,
the
that's a
negotiation.
separate, yeah.
Yeah.
So I mean, listen, if they're worried, but if they're selling their house and they have a non-contingent offer, right? Or a cash offer, chances are pretty low that that's gonna
Yeah,
fail, right?
And some people will waive it and show a POF that's got their 401k, you know what I mean? Like, they're not gonna tap into that money to buy it, but they feel confident that their house is gonna sell.
Yeah.
So the worst case scenario, I guess, would be they'd lose that buyer, they'd keep the 10% that the buyer left on the table, which they could use to pay the 10% if they didn't. But I'm just like walking down the whole thing in case that person walked away. Chances of it happening aren't. I mean, it's an amazing system. I'm just
Yeah,
not poking
so
holes in it at all.
We have some other options, but we also have another product and who Jay's gonna talk about.
Okay.
Yeah,
So good to, really, really good stuff, because
Yeah.
that's,
and this is just a simple
Such a-
guideline that people forget.
yeah,
Mm.
and such a big part of sell before buy is such a big thing.
Correct,
So-
yep. So that's number
Awesome.
one. Number two, we have the ability at Cross Country to help someone get a home equity line in as little as 5 days. And by the way, I've seen them literally close in 2 to 3 days, where they can tap into the home equity on their house in 3 to 5 days, up to 80%. And everyone might be like, well, that's great. Well, this allows FICO down to 640. So it really does help. It really does work. And it's the speed in which the home equity line can get closed. So we had a past client of ours who sold in Norwalk and was moving to Fairfield. She had money in the market. She could have liquidated money in the market to gather the down payment for the new house, but she didn't want to take the money out of the market. Makes sense, right? The market's on a run. So we did the home equity line for her and she bought the new house in Fairfield. And she went from like a 700 to like a 1.8, right? So we did the home equity real quick. It closed in a few days. She went and bought the new house. She can qualify carrying both homes. Her income totally carries it, but she didn't want to liquidate her assets. So we deployed the home equity. And that home equity, as long as the person applying for the home equity does their part, it will close in 2, 3, 5 days.
And if they put their house on the market,
Totally fine. These
even if
people
it's,
did.
even if it's, is it? when
They
it's
put it on the market after we did the home
after you
equity.
did the
Yep.
Okay.
But it closes in 3 to 5 days. So, I mean, that's,
So you
we're
just
not,
have to plan ahead when you
Yeah.
sit down with your buyers,
Yep.
like immediately
Yep.
discuss it, so you can start the process before you go live.
right, exactly.
So,
And then can you go live like 2 days after you? get the
Absolutely.
home equity loan?
Well,
so
yeah.
your mind is going to like a traditional home equity, you open it up as a primary residence, that's a no, this product's different.
Okay, okay.
It allows.
It's
it allows-
actually, I know, we had a situation with a client who was trying to buy in Jersey. And they had obviously a buyer's agent in New Jersey that ill-informed them about down payment. And they thought they can use the down payment on the sale of their house.
It was set in escrow.
Right, they were sitting in escrow, but if they had this option, they could do this instead.
Correct, yep.
Which
They'd
would
have
be
the
great.
cash up.
So I
Yeah,
think the bottom line is when you guys are talking to sellers, you may not want to pry into their financial situation and almost ask them how much money they have in the bank, but you can definitely pry in and say, hey, do you have the funds available to put down the down payment on the next house?
right.
If not, we have some options.
Right,
Like I've got a guy coming from California right now, tons of equity. He's a veteran. So we could go 0% down because he's a veteran, but he had no clue that he needed like a 10% deposit on a 1.5 house, like, right? So we can do something like that for him where we do a quick home equity.
yeah.
Yeah, that's good.
So,
Awesome.
asking that
Love
question up front. The next one is the exact same as the previous. However, let's assume that the buyer doesn't qualify carrying their existing home. So they take out the home equity to liquidate the funds to buy the next house, but they cannot qualify carrying both. And they don't have the first slide, which is a non-contingent offer. right? Their house is just on the market, they have no contingent offer. We have a portfolio of loan products that will allow us to omit a payment on the existing house as long as they have 20% equity in the house. Now, remember, we're gonna do a home equity up to 80%, which means they have 20% equity,
Mhm.
right? So we can do the home equity to liquidate the funds for the next down payment, and we can omit the payment with our portfolio guideline. Okay, so the portfolio guideline just says, hey, Mr. and Mrs. Seller to be buyer, you need to have 20% equity in your house, which we're going to do by not leveraging their house too high. And you have to have a few months reserves in the bank, which a lot of programs require reserves anyway. And 401k can be reserves, IRA can be reserves. We will omit the payment on your existing house. You have to write us a letter that you're
Omit,
listing in 90
right.
days, not count it.
Okay,
So
okay, not count it,
Yeah,
not,
not count it.
not pay it, but just not.
You still have to
count
pay it,
Yeah.
right? Yeah, you still have to keep your debts current.
Pay your bills.
Yeah, pay your bills, but we don't have to count you against. Yeah.
Okay.
I think
So-
we might have a question in the chat also.
Oh, sure. What percentage is the home equity? So the home equity will go up to, well, we have a few different options, but in this particular option we're talking about, it'll go up to 80% of the value of the home, less your current liens. So let's use an easy math calculation, $1 million house, 80% is 800, they owe 500, they'd get 300.
How are you valuing the house?
So the quick home equity that we do in 5 days or less,
Mhm.
everything is done via AI.
Wow.
Everything.
So
That's
they're
why it
basing
closes so
on
quick.
Market price or?
They're
do a
searching-
automated
comps
valuation.
Or,
They do an automated valuation through comps that have closed in the area.
Yeah.
But it closes so quickly because they automate and approve your income through the IRS. They automate your assets and they,
I know, it's
but
scary.
you know what? I will tell you, no one balks at this, like the AI piece, literally, no one balks at it.
I get it, it's just.
It's so easy.
personally
The world is
scares
scary.
me. Yeah. So if I, and we can talk about this later, the tools of AI to do market analysis and all that.
Oh my
I'd love to
gosh,
chat with you
yeah.
about
Yeah.
the best ones.
AI is insane.
And I would like to
Yeah.
talk about that another time,
Kind
but
of a tutorial.
All right, the next slide is, okay, all right, so we do have, folks, the traditional bridge loans. The first 2, 3 options were not really bridge loans, but a way that we bridge using home equity, right? So we do have traditional bridge loans. Our internal CCM bridge loan is a bridge loan that will go up to 85% of the value of the house. So I'm using the example of $1 million home. It'll go to 85, so it's an 850 loan size, but you have to take off your existing debt, right? You owe 250 on that house. So the bridge will give you $600,000. Now,
Towards your.
towards your next down payment. Yep. So you're bridging yourself by using this, okay? Now, the cost of it, and I didn't give you guys a full breakdown on how the cost works because I thought for the purpose of this, you just want to know like high level. The cost of it is roughly $27,000. Now, the challenge with this bridge loan is that you have to include the housing payment, which means existing loan plus the bridge financing in your new qualifying ratios. Okay, so this bridge works. Like we had a customer that moved from New York to Connecticut. We used this bridge for him. There was a certain reason why we did it. He qualified with the expense on the New York house, plus he qualified with the bridge, plus he qualified with the new.
Hmm.
But there was a reason why we did this one versus the other, and I'll get to the other. So this is a viable option. I will tell you, this is the least used option of all our options. And it's not because of the cost, it's just because it's harder to qualify.
so 26,000 is just the cost.
I mean, it's a loan on your departure residence going in second position. So there's closing costs with that. There's got to be evaluation and appraisal, PPO.
Is that like excessive? Like 26, how
Well,
long do you keep?
we're
it?
Might be a
also,
month or
we're
2
also
months.
including the bridge loans 4 months at 9.25%. So you don't make a payment, but that's the balloon payment. So that $27,000 is
2 and 4
inclusive.
months.
It's your 4 month carrying expense
Right,
plus your closing costs. But you still have to qualify with the carrying expense.
Right.
That's
So
the
if you
catch.
close in 2 months,
you're gonna save 2 months on,
So it'll be like half of that?
13,000?
Or-
Well,
because you still got,
You
you
always
still have
still-
the closing
you
costs.
still have the closing costs, yeah, so say the closing costs are 5,000, that's typically like right around what they are, so you've got 22,000 divided by 4 months, that would be your differential in savings. But you know, the reality is, guys, like, right, like, think about it this way. If you bridge someone and you move them to the next house, are you guys gonna sell the current house at a higher price than if it's got all their stuff in it?
Depends.
Yeah.
Most times, right? Like, if they clean up their stuff or you guys stage it or whatever, right? You're gonna get, like, the statistics, the market
Then an
data
empty
shows,
house? Yes.
the market data shows 3 to 5% more per sale when people get their stuff out.
Ooh, wow.
I mean, that's a really good conversation to have
That's
when
interesting.
people are
I feel like
like,
empty
well,
houses are harder to sell.
Well, you can virtually stage, right?
and it depends like how it's,
Price point.
if it's
How
an
empty
order
too,
and
yeah,
it's,
where.
you know, like, this would work well for somebody, or, you know, I totally hear you,
Yeah.
it's
Yeah.
case by case,
Yeah, it's
but
case-
that
right,
makes
exactly.
sense.
It's case by case, but the other thing too to keep in mind is like, when a customer says like, wow, this is expensive, there is cost to it, right? But with really, like, let's be honest, with anything good and quality of life, there's expense,
Well,
right? It's like the cost of doing
It's
business.
a privilege, right? And it's
Right.
also, you know, to be able to do this is pretty amazing. To be able to get into another house you can't really afford.
And if we had a way to present it, we
Yeah.
can talk about this later, but if they're getting their house at a price that's, you know, great, like, would you pay $26,000 more to get this house? If you would, then this is a great
That's right.
option because you're getting what you want if you keep your eye on the prize.
Well, and I'm gonna give you guys an example when I get to the next bridge loan of where like it worked like a charm. Jeff, you wanna answer this question? What's the term of this bridge loan?
4 months, it's,
30-year AM?
yeah, so the monthly expense to your question, 600,000 at 9.25% is 46.25. So in our example, you have it for the full 4 months, that's the payback on the interest expense plus the closing costs. You sold it in 2 months, you're gonna save 92.
So
Alan,
what-
did you hear that? Okay, cool.
So what happens if they don't pay in 4 months? What
There's
is,
extension costs, you can do up to 60 days of extension.
and the rate goes up or?
There's just
fees
a
and-
fee,
Okay,
cost to extension.
okay.
to
Okay.
extend.
It's also a good reason for you guys to be able to put a listing on at a reasonable price that would get bid
Oh
up
my
versus
God.
someone who wants to
So
list
we're-
high.
We're doing one right now where we're going through the traditional bridge process. They're putting their house on the market. We've got closing in December. They're hopeful maybe they can bail on the bridge if their house sells.
Yeah, and we're gonna talk about that too at the next
Yeah.
slide, how you set up with a bridge, but then vacate the bridge because you guys have it sold.
Mm,
Okay.
The one that has the contingency free offer.
Exactly,
Right.
yep, you got it, Julie. All right, so the next one is what I call the high bridge. High bridge because it's a hybrid bridge, okay? So this one only gives you 75% versus 85%. So it gives you 75%, so I use the same example, $1 million, 75% is 750. They have the same loan amount of 25,000. The cost on this one is a one-time expense. On this one, it's 25,000. They extract 475. There is 0 monthly housing expense, and they do not have to qualify with this bridge loan. Now, why? The reason why is the lender on this bridge loan gives them, we're gonna roll back to the first one, the lender gives them a contract with no mortgage contingency. So the lender gives a contract that they're gonna buy Julie's house from her
Oh,
with
yeah.
no mortgage contingency. They do not want to buy the house. It's a mechanism to allow them to fund bridge loans and have the buyer go buy the next house. So I'll give you an example. A realtor here in town called me and said, hey, I've got this great condo in Fairfield, but the woman's a hoarder. And it's gonna sell like crap. Like value-wise, it's just not gonna do it. What do you have? Now, the interesting thing was, we didn't do her next mortgage. We just did the bridge for her because she had so much equity. She didn't need a loan to go buy the next house.
Right.
But this agent wanted her to do the bridge to get her garbage out, not
Oh my
garbage, but her
gosh.
stuff, because she knew she would sell it and it worked like a charm. So we got on this woman was like an older woman, so we got on the phone with her son and we explained the cost. And we said, listen, but the agent feels she can get like 5% more, so your net is, and it worked like a charm. Now, it's not just for that scenario, it's for any scenario, but the reality is that the statistics show you a staged and vacant, or a vacant slash staged home will sell for anywhere between 3 to 5% more than someone who has their goods and stuff in, right? They always say, when does the house look the best? When you buy it, when you sell it, right? Right, like, right? You know, right?
So
I mean,
true.
I know I got 2 kids romping around my house and 2 dogs and everything else. So this is our hybrid bridge where we give a contract to buy their house.
So what would the interest rate on that one be?
No interest rate, Jeff?
So let me explain some details. They're gonna do a value on the home, right? And determine what amount of equity they're willing to advance at that 75% cap. There is no expense until you sit down with their notary and say, I want to go through with the program. So what, from their estimated equity advance, what they're gonna deduct is the program fee and $1,000 inspection fee. Their program fee is 2.4% of the ultimate sales price of the house. But you're not paying out of pocket for that. They're just deducting that from
That's like
the
a realtor
equity.
fee.
What's that?
It's basically like a realtor fee.
Right.
It's
They're-
2.4.
Yeah, they're deducting that from the amount that they're gonna advance. So they're gonna do an initial valuation. They're gonna say, this is what we are offering in order to complete the offer. We've got to send out an inspector. The inspector's not looking to nitpick the house. They're just looking for structural safety.
Make sure it's standing and it's gonna sell.
And
Exactly.
this is before it comes on and they share the inspection
You can have it
report.
listed.
And they share the inspection report with the buyer,
Um,
with the seller.
That's a great question. I've
It's
never
not a
been
full
asked
inspection like you're
It's
thinking.
good to have.
It would be good to have, yeah.
So that would be,
Like,
I mean, I don't know how
that. I'm
often,
sure
The
they, I'm
inspection-
sure they will.
because we want to sell it
Right.
and they
That
don't
would
want
be
to
in their
buy
best
it,
interest,
so it
right?
would be in their best.
The
interest to sell it.
inspection is more because, well, it's all because the lender is giving you a contract to buy the house. So God forbid they do have to buy it. They want to make sure they're not getting in bed with something that's like falling over.
It's almost like an
Right.
appraisal. It's like
Yeah.
a inspection slash appraisal.
Yeah, make sure it's still
Well, they
standing
do
and it
an
can be.
automated
Make sure that
valuation on the
there's not
property. They
something
also
wrong.
have an appraiser,
Yeah,
so.
it's good for
Okay.
us
This
to
is their
know so
one
that when we
eyes
sell it,
on the
Right, right,
Did did we do this for the, so I want to talk about the backing out part. Did we do this for our gentleman that Tracy worked with in Milford? Chris.
We had it set up.
Okay, yeah, so talk about that.
Yeah, so we have it set up and available to the customer. Now, this customer was able to put their house on the market and not use the equity advance because they sold their house and closed before they needed the money. And they had no expense, but we were able to help them shop with a non-contingent offer because they had this in their back pocket. There's 2 options. There's either get the equity because you need it on the next home, or just do a DTI drop, what they call debt to income drop.
Omit the payment.
Omit the payment of the departure residence. You have the money to make the purchase, you don't need their equity. In that scenario, their fee is
1.2, right?
1.2, minimum of 5,000. Now, the 2.4% of the ultimate sales price of the house scares people with $2 million houses. I can't guarantee anybody, but I do try to negotiate. I go to because this program's with a separate company. I do try to negotiate for them, and oftentimes they'll drop their fee. What we tell people is you need to make a decision about 2 weeks before closing on the new home, whether you need this program and the equity, and that's when you're going to be committed to the fee, right?
So if they can sell their house before that, then they might actually not.
And the only reason we say 2 weeks is because we need time to get them clear to close. We need to know that they've got an executed contract, needs to go back into underwriting, and the company needs the time to set up, send out the notary to sign the documents and be prepared to advance the equity. They don't get any money in other than the initial bridge that Jay talked about. They don't get any money with the traditional bridge loan or the hybrid bridge loan in advance to help them with their earnest money deposit. It's they're gonna fund at closing.
So, but, so say you get 2 weeks ahead of time, you realize you don't need that money. And what have you paid? Like,
Nothing.
so it's just a kind of a trick, real, or it's just like
No,
a
the lender's
tool?
taking a risk,
Okay.
doing all the work. If they're not
But how are they
charging
getting
you,
paid then?
they're
Who's-
taking a risk. They win some, they lose some.
What
Okay.
percentage do they actually buy? Like, is this a
So-
tool?
They've never
where
bought any of ours.
They don't really want to buy,
No,
They don't wanna buy. it.
But they don't even
No.
get their two
they're
and a
not
half.
getting their loan,
2.4%,
like,
okay.
if,
but think about it. I'm sure what they've done is they've done the math and they said, okay, if we charge 2.4 on everyone, even if 20% fall out, we're still making money,
That's why they charge 2.4.
Right.
Mhm.
right? So it's kind of like an averaged fee over all their deals. I don't know. I mean, what, 50% of ours have closed with the
Yeah.
bridge? I
Right.
mean, I would say it's a decent amount. I mean, one we did in Southport, that was actually like a one point something to 2 point something million, right?
Right.
Like this customer didn't want to liquidate their assets and said, you know what, I'll pay the fee to keep my money in the bank.
so can this may sound self-serving, but if Lorelei uses this, she's my seller.
Mhm.
She now pays the referral, like, let's say 5% to the realtors, 2.5% to you, she walks away with her equity, the bank now, or whoever this is owns the home. Are we gonna get that listing? Do we have a shot? at it?
So here, they don't wanna buy your house. You are required to market your house for 120 days. You still have to be prepared to carry, so they're gonna market before they execute on that contract.
And so the 2 weeks, 2 weeks before, they,
Well, first of all, once the customer has an accepted offer on their purchase by using the bridge, you guys throw their listing up, right? So hypothetically, Lorelei, we get her set up on the bridge, right? We get her set up on the bridge and she's like, all right, Julie, I've got a path to go forward. The Tolisano group set me up. Let's go. You guys get the accepted offer.
We
Julie,
list the house.
right away.
Yeah.
Your closing is probably not for 30 to 60 days.
Yeah.
So you got 30 to 60 days to market the house. Now you got another 4 months if it doesn't sell before they buy their next house. So now you're at 6 months runway, and then they'll give you an extension for.
Well, so they're not gonna buy that, say they use the program, close on the new home. The customer still needs to market the house for 120 days.
and they're paying the costs of
They're
carry.
paying the cost of carry.
The
Right?
customer,
Right.
paying the cost of carry.
customer.
Yes,
Now, let's say it doesn't sell in 120 days and the company executes on the contract to purchase the house. They're still gonna market the house with you. Right? They're not gonna pull the listing out from under you. They're gonna still market the house and the customer's still gonna get the upside on the ultimate sales price, less their expenses. Obviously, they have insurance costs, maintenance costs, utility costs for after they've acquired the home. They're gonna net those out of what they ultimately pay the customer. But they're not gonna pull the listing from you.
This lender does not want to be an asset.
yeah.
They-
no,
they
I
don't.
can't
That is
imagine.
not
happens
their-
pretty rarely.
That's not their
Yeah,
goal.
in
Does
this
this,
market,
does
yeah.
this happen with you guys much?
Yeah, we've set up a number of them. We've set up a number of them where we've helped the customer shop non-contingent and they've never
They've
used the
never used
program.
it, but they use it.
We've had a few that have
They-
used it, and
yeah.
we've had a few that have been able to,
Interesting.
the Milford one was able to sell. Yeah, the Milford one was able to sell. And those people were dying to buy a new house and just couldn't figure it out, and
Yeah.
this helped them.
And by the way, the first example that Jay gave, where we used the program, the customer was able to purchase for cash. We didn't get paid. We don't get paid.
Because we don't get paid on that bridge.
Right.
So we don't get paid on the bridge, and they didn't take financing on the new, but that's okay, because we helped our realtor partner put a deal together. And now she's like gonna use this. I mean, she already did use this all the time, but right?
Start doing the
So,
best-
right,
The right thing.
exactly. It really comes down to, of these 5, what's the best?
Yeah.
Right?
Interesting.
All right, so Mariano, anyone have any other questions on the bridge?
Anybody on Zoom?
We're a few in
Everybody's
the
all
chat,
good?
but yeah. I think we got all of them. All right, cool. The second thing that I wanted to chat with you guys on, can you pull the second piece up?
Yes.
Mariano? Here, I'll give you.
Thank you.
I actually don't need it anymore. So I'll
Perfect.
just transition back to you.
Thank you.
Thank you.
Put this to everybody here. So, there's 3 or 4. So Cross Country Mortgage is first and foremost the #1 lender in the country.
Thank you.
And when I say #1 lender in the country, I'm talking, we do more financing than Wells Fargo or any of the big banks. We do more financing than any of the independents. And you might say, well, why is that important to me and my clients? The reason why it's important to you and your clients is we often get a lot of programs that other lenders do not get earlier. So we get programs from Fannie Mae and Freddie Mac earlier. But additionally, the CEO of our company, the best way to describe him is he's a winner and he just wants to win. And how can he win and how can he help others win, right? Like quite candidly, it's not about money for him anymore. It's really about how can he constantly improve the company. He's the most progressive owner I've ever seen. And one of the things that we have done is we have grown out our portfolio business. Now, when you think about portfolio, you typically think about banks. Banks have portfolios. Well, Cross Country Mortgage has a portfolio. If you look in the Housing Wire over the last 2 weeks, there's an article that shows how our CEO just got $1 billion in backing to expand our portfolio by another 20 billion.
Wow.
So he raised $1 billion from Ares Capital and Hildene. You guys may know some of those names, they're pretty big names, to garner another 20 billion in funding in this product set. This product set is what would help buyers that are outside of the normal box of Fannie Mae, Freddie Mac, and Jumbo, NBA, and FHA financing. So on this sheet, Mariano, what I want to do is on the sheet here that you guys have in front of you, I'm going to highlight a few unique scenarios that we've done recently. So the first one there I'm going to go through is a builder. They needed cash out to buy another property. They actually live right here in Fairfield. They went to their bank, couldn't get a loan, came to us. We were able to get them $1 million out and they went and bought their next property. Okay. Yes, we used the 12-month bank statement program, which you guys have probably heard of. Ours is very aggressive and we can close these in 3 to 4 weeks. Okay. Second one is a self-employed borrower. I don't really know how she was making money. That's my joke. I don't know that. I couldn't figure out how she was making money. I really don't care.
Influencer.
Yeah, influencer of some sort. So that was no income, no asset, or asset from the sale of her house, but it was basically no income, no job. Okay. Scroll down to the bottom, Mariano. I'm going to skip some of these. You guys can read the others later. This large property investor bought a house here in Fairfield Beach. He owns, this was Jeff's nemesis deal.
No.
He owns $35 million worth of real estate here in Fairfield County. It is how many units? Do you know how many units it was?
It was like 30 different units.
30 different units, multiple different properties. You look at his tax return, guys, there is no way you're getting this guy a loan. Then you run the rental income calculation on all of his rents, no way he's getting a loan. You look at the bank statement transaction, no way he's getting a loan. So what we did was we partnered our bank statement loan program with our investor program, meaning like rental property owner program. He bought it as a primary residence. We underwrote every single 30 properties he has individually.
Wow.
To net it all out. And then we qualified him for the purchase here on Fairfield Beach. It took a few weeks, to say the least. There is a printed Excel file on Jeff's desk that is framed with redacted client information because he might have banged his head against the wall about 100 times. But I had to give him a hard time.
It's like, I can't take this anymore.
But it was extremely difficult. So we underwrote every rental
Who
property.
is this person?
My brain went to Ken Cleveland. And
Yeah.
he said,
So this was,
I said to Ken, because he just bought, and he knows, is he your landlord?
he was my landlord
Okay.
previously, yeah.
He said he knew you.
So it's just very, 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 very complex, very unique.
And they didn't have cash.
He had down payment money, yes, but there was no way, and he had a development going on in Vermont. I mean, he's spread all over the place, but he makes plenty of money. He just doesn't claim it.
We're all trying to figure out who
I
it is.
know.
All right, so now keep
We're doing
going
your
down. Mariano, if you scroll down a little bit. I just want to point out investment DSCR we have. I don't need to go through that. Unless you guys know what the investment property DSCR is, right? Does everyone know what that is?
Mm-mm.
Okay, cool. I thought everyone did. Investment DSCR is when, I'm going to take Lorelei. She wants to go buy an investment property, but she already has multiple investment properties and she doesn't qualify, just like the other guy. She doesn't qualify because her income is tapped out on everything that she has. Even though she makes money, she cash flows, she's fine. But when you look at her tax return, she doesn't make enough money. So DSCR is where we take a 1 to, do we go with 5 now? I know it's
I don't know
4.
if we have five.
1 to 4, 1 to 5. We underwrite that property on that property. So it's the income of the property is tied to the expense of the property. So the rest of Lorelei's financial life is excluded. So like we are looking at 123 Main Street. If she's buying 123 Main
Oh, wow.
Street, we're looking at the rents on that property versus the expense on that property. None of the other stuff plays.
Right.
Even if they're not
Rented.
rented yet, even if
You have
there's,
to comparable rent schedule in the appraisal, as long as the DSCR ratio is
Wow.
1 or greater. We even for seasoned investors, we even go down to 0.75. So the property could lose money and we could still get that
Okay.
deal done.
What if the property is leased out, but the leases are below market rent?
We work off the market.
Okay, awesome.
When we have investors like Susan that we're working on now, we'll qualify them with the full typical Fannie Mae, Freddie Mac investment property products until they run out of room.
Mm,
And then once they run out of room, we go to DSCR, right? Like that's that's
Interesting.
right. Okay. All right.
Do the alimony one, because we have a lot of those.
Cool. So I'm going to do the next two where it says non-QM and then alimony saved. So non-QM, this customer had less than 6 months of alimony. Fannie Mae, Freddie Mac, Jumbo require 6 months of alimony.
I could not get a house. I closed on my house on literally the 6-month date. And then the
Because you were
check
ready.
that he gave me for that 6 months was lost in the mail. And it became this whole thing to
Mhm.
prove that I got the 6-month alimony payment
Mhm.
and I couldn't close before that.
Yeah.
So that was awful.
Wow.
And
There also can be issues when there's variability in the payments.
yeah, the whole thing was.
Well, we're going to get there too. Don't worry.
So that was my own
We
personal.
got that one on here.
Yeah.
So yes, now FHA will allow you to use 3 months of alimony, but not everyone wants FHA, not everyone needs every FHA, and not every property will work for FHA. So just to be clear, FHA will allow less than 6 months.
I didn't even know that.
Yeah.
And my real estate agent didn't tell me that.
So this customer had 3 months of alimony. She was selling a $1.8 million house, buying a 650. She wasn't going crazy. She was downsizing. The 1.
Divorcing.
Right. The 1.8 was on the market, but hadn't sold. Another big bank had approved her. The moment she had an accepted offer, the bank said, "Oh, sorry, we can't help you anymore." She's like, "Wait a minute, you just pre-approved me yesterday. I'm accepted today." Like what? So the realtor pushed her over to us. We used the 3 months. We excluded the payment on the existing. Remember we talked about that other guideline where we exclude the payment if you got 20% equity. She had plenty of equity. We closed her in like 3 weeks, right? So less than 6 months alimony. The next
That's
one,
because she owns something.
So just, we were able to get an exception because we have portfolio loans, we were able to get an exception on that guideline to use less than 6 months. And we excluded her property under the same set of guidelines to qualify her for the new purchase.
now, she wasn't putting 3% down. She was putting like 20 or 30% down, right? It wasn't like, it wasn't
Right.
100% financing, like hanging by a thread, right? So, but it was a good transaction, but no one will do it unless you have a portfolio to go to. The next one, this next alimony save, is that for whatever reason, the separation agreement did not stipulate the exact amount of alimony the ex-wife was going to get. The ex-husband would just put money in her account every single month. They were legally separated. So basically what we did was we worked with underwriting, and this one took a little massaging, and we used a 12-month alimony average of the alimony payments. Now, where it took the massaging was there was like 1 or 2 months where it was like a few $100s alimony or something. Like there were some crazy months where it was like 10,000, 10,000, 1,000, 10,000, 10, and like, so we had to talk through with underwriting and, you know,
So the alimony was, the terms of the separation agreement were, do 50%, right? And then there'll be a true up on bonus and commission. When they originally got divorced, he was not employed. So she was getting 50% of rental income from properties they own. So the payments were all over the place.
Wow.
We were able to get a 12-month history and use the average of the 12-month and get that loan.
and then last but not least, the self-employed contractor. This is a local contractor. Some of you might use this person. I have to keep them nameless, but they're a friend of mine. and they have a storefront locally. And I've done 2 mortgages for him in the past, and he wanted to buy a $1.5 million house. And I said, buddy, I don't think we're gonna qualify you based upon your tax return, but get him over to me. I'll look at the most recent year. Most recent year qualified him for 600,000, period. Got his bank statements. He could literally qualify up to 4 million. He wasn't buying 4 million, he was buying 1.5. So he could buy up to 4 million by using the bank statements. So we got the deal done. The biggest thing I wanted to show you guys, like, look at the last few scenarios. The last sentence, which is in bold. Client was referred by their banker. Client was referred by their accountant. Referred by realtor, yes. But if you keep going up, you'll see a lot of these are referred by attorneys and bankers and business loan consultants that refer to me. And I bring this up for you guys for one reason. A lot of realtors miss that these programs are out there. And why is it important for you guys? Because you will level up your game and bring more value and work with more customers if you guys understand these products.
100%.
I mean, I went through all these deal saves, and the common thread was that, like, the majority were not referred by realtors, which tells me realtors don't know enough about the products.
Yeah, I love it.
So,
And I do think there's so much farther we can go with the relationships we have with mortgage brokers and attorneys that we've been talking about doing for years and air and all of that. But I really think now more than ever, partnering with people to educate earlier in the game, not just, oh, I got a mortgage guy, you know, like really bringing it in so that we're influencing their life.
right.
And we've got to start sooner beyond just influencing their decision to buy a beautiful house. It's their decision to be protected, and this is the partner that you have. Really, there's so many different options, and I'm not an expert, but I've worked with them. So before we go for it, and really, if you were buying a home, wouldn't you be much more likely to use that realtor that wants you to talk to other people to help educate them versus, oh, when can you go out?
Right.
Well, you could always get a bridge loan. Like, that's like you're just selling them to try to get them to do the transaction, which is why it's such a greed infested industry and we have such a bad reputation. So if we level up and partner with people like Jay, and we've been looking for partnerships like this for a long time. I really want this one to stick because I've seen your videos. He's like we are. He's an educator. He's not just hearing him say what my favorite part almost was, we don't make 100%, but we helped another family make the right choice,
Right.
and they're going to remember us. And how often do we say that? The Move or Improve program.
Referral.
Yeah.
And we're all about the relationship, and most people aren't. And most people will talk the talk and not walk the walk. And I feel really confident for the first time that I feel like bringing people into the educating process and doing educational seminars with you. Like, I really love what you're doing online because it's quick, it's educational. There's not this, it's just honest.
Thank you.
And I'd love for us to be a part of that.
Yeah.
And when we're going on a listing presentation, talking about what's your next goal? Do we want to do a home equity loan? Where are you going? And if 90% of the time they don't, just the fact that we had the discussion with them, I think elevates us. That we have the relationships, because that's what's missing in our world today, connectivity and personal touch. And I'm really excited about this partnership in you know, in particular. So,
Listen, like, I'm doing a transaction with Brandy right now. I think we just both happen to be working with the same customer. I'm doing a transaction for one of Lorelai's listings, and
one of my buyers.
one of your buyers, that's right. And, you know, any lender can come and do the 20% down, 740 credit score, right? Like, those are pretty easy. Like, we've got your sale clear to close in like 3 weeks, and that's a jumbo. But these deals are actually, these here that I've highlighted are actually the ones that candidly we liked. We have to think more, and it makes it more exciting. And it really is more, I mean, other than the one that Jeff almost put his hair up. But the bottom line is, like, when you have these success stories are actually what, like, really make us smile, right? Because these are like the fun ones. Like, when you help someone achieve a dream that they couldn't achieve otherwise, that's the one
That's
that
how
you
we
like
feel.
remember.
That's how we see. That's
Right.
why I like this partnership, because
Inspiring.
it's about what is our mission?
What's up, Chris?
To create opportunity.
Yeah.
And that's whether we're paid for it or not.
Yeah.
We get paid, what we get paid should have nothing to do with how we behave and how we educate and how we work with our clients. And that's rare. And it's nice to see in partners. So I'm excited.
Cool. Anyone have any other questions?
Do you do mortgages in Maine?
Oh, All 50
Alright.
states.
I'm gonna have you look at a mortgage and
All
I'm looking to
50
buy another
states.
property,
Yeah.
become a farmer off grid.
49.
Part-time.
And Puerto Rico. We have an office in Puerto Rico.
Oh, wow, really?
Yeah.
Oh, no way.
Yeah,
Oh,
Puerto
so
Rico.
cool.
And I've referred people to the woman in Puerto Rico. I can't do those, but she's there, she's great. So, yeah. So, I mean, I'll see you guys next week, but
Yes.
anytime you guys have questions, please reach out. And I always say, it doesn't matter if Jeff and I are working on the transaction. If you have an issue with another loan, another lender, you just want to run it by us.
I
Like
did that the other day, yeah.
we have helped realtors save deals that we're never a part of. Like I've literally drafted emails to realtors and I say, copy, paste, and send it to the lender. And they do, and then the deal gets done.
Wow.
So like, just reach out. Doesn't
Thank
matter.
you.
Well, one thing I did with you is, and it didn't work out this time, but it will the next time, is I just said, before I referred you, I wanted to know what could you do for them? And you ran some quick numbers. I didn't have to even share their names. It was just confidential. He ran some numbers. He was like, actually, I would come in a little bit lower than what you're telling me they're currently
Wow.
getting on their interest rate. So then I could go back to them and confidently say, you need to talk to Jay, because I think, and it didn't work out, but the next time it will.
Yep.
And now I know I can do that.
Thank
All
you,
right.
Jay. Thank you, Jeff. Thank you both very much for
And
your
everybody,
time.
Jay.
Thanks, guys.
Sponsoring, if you don't already know, Jay is sponsoring our
Oh,
party,
years,
which is next
years.
Thursday. So I urge all of you to get on the phone today, just to do a gentle reminder to the clients who you haven't heard from, because most people don't respond to emails and invitations. We want to bulk up. I know Mariano said the count is kind of low.
No, we're good.
Oh, we are?
We bumped up this week. We already did that, yeah.
So if you have anybody, don't forget to reach out to them.
I
And
don't know.
awesome. I love everybody.
Thank you, guys.
Thank you.
Oh, wait. One more thing. We have a team walkthrough. Brian, did you see the email?
I didn't yet.
They haven't signed the agreement yet. I'm relatively certain they will, but they're great. But it's at 116 Roseville Road, Monday. Check the email. We'll put it on the calendar. It's a magnificent home. No photos allowed, no video allowed. But please try to come. It's an important one. It's gonna be. Bye,
Thank
Jay.
you so much.
Jay.
Thank you.
It's gonna be, in the 4 range. And Joe from Coastal is building $7 million houses in that same neighborhood. So the neighbor will be a $7 million property. So it's a really cool house. So please try to come. I don't even think I'll be here, Brian. I'll talk to you later. But
Okay.
I wanted to make sure it got on the calendar today so you can plan for it Monday.
All right, I'll be there. Can't wait. And
All right.
yes, we just have to be sensitive. They're
Yeah,
a little nervous.
yeah. And it's a beautiful house. It's a beautiful house. So I'm excited for you guys to
Does
see
it have a
it.
pool?
Has a gorgeous pool, gorgeous grounds, 2.5 acres, a pond. So not like tennis courts, not big open grass. It's on Roseville, but it's down a long, long driveway. There'll be
That's
two
quite a bit.
driveways on that. There'll be the one to the left and the right, but just so you know, the one to the right, the third driveway on that like share is not gonna be there. And once you get in that, it's a gorgeous quality, gorgeous grounds, mature trees. It's beautiful.
What is the address? Can you share?
116 Roseville.
There's
Hope everyone can make it.
walkthroughs on Monday too.
What
One
are
at
they?
11. You guys have Hunyadi at
Yeah,
11.
I was gonna say, we have a couple things going on.
11:30.
Oh. What time did we say that with them?
We told them usually right after the meeting, like, I think we told them 12.
I think we
Oh.
said 11:30 to 12:30.
I think 12 would be great. If you guys did say 12, 12 would be perfect. Because it could be Hunyadi, Sharon's, because Sharon's is in Fairfield
I think we
too.
should switch Hunyadi to at the end. Hunyadi is a
As long
vacant
as
house.
you can, like, I'm
Yeah.
just saying for scheduling, because
Who's
they're-
doing Hunyadi with me?
Jeff,
Yes, we'll talk to, I think we'll probably switch Hunyadi to the end because people will be in and out of the other two.
okay,
And this one is a new construction, and I'm just gonna share a little bit about Hunyadi. They built, if this house was in Greenfield Hill, it would probably be 2.5, 3, no, more. It's quality, like beautiful quality. It's a young, it's a family that is so proud. They put way, way, way too much into it for Hunyadi. It's incredibly overbuilt for Hunyadi. He's gonna use this as a show home, and he's building a house on Clinton by the beach, off of Clinton. And he wants to use this to be a jump starter. He knows he's gonna lose money on it. So he's gonna want your attention to show a little bit of the details of what he does, because you gotta think of it, this isn't about the house, this is about referring him or selling his next product. So I think it's really, I would love for as many people to go there, because it is an exceptional house with exceptional lighting. And you'll see what he's gonna be building on Clinton, which will probably be closer to 3 million, and you'll have a heads up on that. So please come to Hunyadi, and that's what I'm saying, we'll do that one last, okay? Because people can just come and go and listen to it, all right?
So they said we can have the house from 11:30 to 12:30, and they'll be out at 11:15. So I guess they're not going to be there.
Sharon's,
Sharon's in Fairfield too, but hers starts at 11:30.
well, that's okay, because if it's in Fairfield,
Yeah, I think hers is a condo. so
Hers
it's-
is, so you guys have Hunyadi and then Montauk Street. So hers is from 11:30 to 12:30 Montauk Street.
is it vacant?
I have no idea.
I'll talk to Sharon. Maybe
We
we'll
can-
try to get Sharon to do 12 to 1. I mean, 12 to 1, and then you can go
We're
Hunyadi.
just talking about what do you call it, right? Westport and Fairfield.
Westport and Fairfield. So
So we could stack them. Come to one, come to both, come to
yeah,
all.
11:30 isn't that bad anyway, because if you're going to Montauk at 11:30, you can get to Westport by 12. I just feel like if we can get her to move it a half an hour, it's better, because then these people are going to Westport, then coming to Montauk, then going to this one, instead of going to Hunyadi, which is very close to Montauk. So we don't want them, you know what I mean? It'll just be easier if we can. If not, we can fit it in. It'll be fine. But we'll definitely move Hunyadi to like 12:30 to 1:30.
Okay, so Hunyadi, so you guys are saying that Sharon's, you're gonna see if Sharon can move to 11. Okay, we could,
Yeah,
we'll,
even if Sharon doesn't,
you
it's an
guys
hour.
will dig on the calendar on Monday.
You will.
All right,
So
everybody.
Please mark your calendars now so that you can come to them, and you don't book something that isn't necessarily urgent for that time.
Have a great weekend.
Thank you,
Bye,
guys.
guys.
Everybody.
Thank you.
Bye.
Bye.
Bye, guys.